All right, so today's call is a little bit different than usual. Um, Basically, I'm receiving a lot of questions on pain markups, liquidity, where are the stop losses, where do people enter, and stuff like that, the basic stuff. And I don't have too much time answering all of the DMs. So now I just decided to not answer them anymore. So I'm gonna do a call on the way I do it. Again, this is my personal understanding of the strategy. You guys can do your own due diligence and understand the way you wanted to understand it. But basically, this is how I do it. And if it works for me, potentially it can work for one of you guys also. Okay, so I'm not showing what time frame this price action is. I just decided to take something that has relevant liquidity on both sides. I'm gonna go in bar replay, and we're gonna go and candle by candle explaining who's entering and who's being taken out. All right. Afterwards, if you guys aren't satisfied enough, we can jump into a Q&A and I can help you guys out in any issues or obstacles you guys have. All right. So probably the call will be 30 to 45 minutes for this day. And afterwards the Q&A, we can have another 20 to 30 minutes. All right. Let's start. So, all right. Now there's no registration. There's nothing. It's only pure price action. Okay. So what we can already see is I like to mark up my liquidity in orders, right? So it's breakouts, or break and retest, trend lines, then I go in support and resistance, and then I complete with SMC and SMT. Okay, it's really clear to understand that I only mark up relevant stuff. I don't put all of the little internal breaks and stuff like that. I just want to mark up where people are actually entering. Okay, when there's no doubts, and especially when there's vector candles and when candles close below or above structure. Okay, simply enough, we can already see we have a new structural low. So this means we have people trying to enter here, right? Where would be the stop loss? It would be here, right? So that's pretty straightforward, okay? So if this is a breakout, let me just put this in bigger. What is it also for other retailers? It's also a BOS. So let me just do, so a BOS for retailers, right? So if this is a BOS and this is a breakout, we can potentially see a PY here. First, before we mark up that PY, let's see what happens next. Okay, let's play price, play price. As you can see, we have this little structural low. I'm not marking up this. This is irrelevant. It's internal. I'm not interested in this. Okay, now price is coming back. So now we could mark our SMC, okay? So what I'll do is I'll do this, like this, SMC, okay? So where would be their stop loss? Same location. What I'll do, okay, for visual representation, instead of doing this and this, I will add the stop losses above the other ones. This is only for visual representation. I'm not trying to tell you guys to do this because this will just ruin the chart hygiene, but I'm just explaining that this is something you can do to understand. Because let's say if you have here, all right, a trend, okay, you have here the trend line support, but you have also the breakout and retest trader here. There's two stop losses. So which one would be more relevant, this zone or this zone to take? Where multiple stop losses are, this is where the relevance is, okay? The more stop losses, the more relevance it is to be taken out, Okay, so let's continue. Again, I'm just trying to explain that this is how I do it. You guys can do whatever you want. All right, so now we have here we have potential. I'll just wait until there's potentially a new low done to confirm if these are equal highs. Okay, so important thing to note. When we have equals, for it, equal highs or equal lows, for it to be confirmed, it needs to be creating a new low or new high, right? Because otherwise, if it comes here, you confirm these are equal highs, but it hasn't enticed no one to enter. Now, let's go in a little bit understanding that this is a lower time frame, so we could potentially argue that this made a new low in here. So this is where they would enter. People think that the retailers enter when it touches the line. No, it needs to make a new low here for them to confirm. So I should actually put breakout and equal highs here. But of course, it's going to confuse you guys because this would be where they enter. So what I'll do is I'll put it here so it's simple and it's more clear for you guys. But it's important that you understand that they enter here or maybe under this low and not here, because otherwise it would make them super precise and it would be way too easy and they would be stopped out too much. Every trader is actually a structure trader. They see it structure as a confirmation for them to enter. So if we have equal highs in here, we have another strategy, we add a stop loss, right? So if we have a breakout traders here also, we add a stop loss, okay? Everything clear from now? Why do we don't have stop loss here? Because the person asking for the time frame, it doesn't matter. Every time frame is the same thing. We can be in 1 minute, 30 seconds, 5 minutes, 1 hour. It's all the same crap, okay? So why is there no stop losses here? Simple, price hasn't done a new high, okay? Let's continue. So we have some alerts. I think I TP'd my EU. Oops. Let's go. Let's go. Let's go. Let's play price. Okay. So now, as we can already see, we potentially have kind of a trend line here. Okay. Can we mark this up as a channel? So what I do is I hold my key control or command on Mac, and you click on it and you drag it. So you clone that line perfectly, okay? Let's see how this goes. If I don't like this line below, I'll potentially remove it. But for now, I think it's pretty good like this. As you can see, I'm a little OCD. I like everything straight. Make sure this is straight so we can see that we have maybe a potential trend line. So we have 1 touch here, 2 touch here, 3rd touch. For the trend line traders, they would enter at the 2nd touch and the 3rd touch. How can they enter at the 1st touch if they haven't even seen a trend line confirmation, right? So this is how I see it. So it's important to note that trend lines are 2nd touch and 3rd touch, okay? Let's continue price. Okay, now what can we see? This is really important again. So we see a new structural high. So what do we have? We have this stop loss here taken. So what I'll do to show when a stop loss is taken, I'll drag it here so you guys can see actually where it's being taken. Okay, so now if this is a new structural high, we have a breakout traders entering. So it means we have stop loss here. What is this also? Remember, retails don't enter at perfect touching equal lows. they're not that precise. So of course, sometimes we can see this as a zone. So if you see me doing this line, right, it means that these are equal highs. How come these are equal highs? It's simple. It made a new high. So they have 2 touches, 3 touches here, potentially. This zone has been retested multiple times, okay? So what we have is equal lows. So let's mark it here, equal lows. I'm sorry if what I'm doing is boring. I think it's essential, okay? So let's see what happens now. Okay. Okay, new structural low. So we have also, God damn it, also breakout traders entering here. Okay. What also happened is the stop loss of the equal lows is taken here, and we have a new stop loss. So see, they're building liquidity by taking out liquidity, okay? So this is basic false breaker structure. You would have potentially your trade here, and you're trading in line with the liquidity, not away from it, okay? But let's not go into entries. What also happened, since we have a breakout, we have a new structural high, it means we have a retail BOS. If this is a retail BOS, it means it's a false breakup structure. What does this mean? It means that we have an SMT here, okay? So we have an SMT. So we had little mini stop loss here, also taken, okay? That's pretty clear. Now let's continue. Now we have a break, okay? Okay, price is pushing, no real structure here, okay? Okay, so what do we have here? We have now a support. Is the line below is a support? It's a support, right? Or a resistance, I don't remember. Well, that equal low becomes also a zone for break and retest traders, okay? What happens with break and retest traders? A lot of people support. Thank you. Support becoming resistance. A lot of people think that we have breakout traders here. Where's the stop loss? The way I've backtested it, I will be putting the stop loss in here. Okay. If we have also a new structural low, what do we have? Also, we have SMCs. Okay. So let's put an SMC here for that POI. Okay. POI. So what do we have also? A second stop loss. Let's just put them a little bit below here. Okay. Let's continue and play price. Now we starting to potentially see also maybe a trend line forming in here. 2 touches. Let's see if there's a third touch, and we'll put it there. Okay. So here we go. We have a new structural low. Okay. New structural low. What do we have here? A breakout traders. Okay. So we have a third stop loss. Why? Because this is the push that led to the new low. Okay. So this means the stop loss location is here. Let's continue and play price. And to be honest, every time price will come back and retest an imbalance decisional POI, it will be for SMC traders to enter. So we're building liquidity to the downside. So intentions wise, we're pretty clear. We're going down. Okay, let's continue. New structural low. New breakout traders entering. This one is kind of a little bit pulled by the hair, but we'll still do it so you guys can understand here. A second stop loss here. Let's continue price. Now price retest this zone here, imbalance POI again, okay? Stop loss for the SMCs, okay? I know it sounds boring, but I mean, it's pretty clear that some of you still don't know how to do it, so I'm taking my time, all right? Let's continue price. Okay, now I think it's time for us to draw this cute little trend line. All right, we have a beautiful trend line here forming. So what do? We add our liquidity. Okay, so we have second touch. Oh, God damn it, that's not what I wanted to do. We have that second touch of the trend line, adding a fourth stop loss, and that third touch here. I'm copying everything here. Now it seems a little bit all over the place, but remember, I'm just trying to show and display the way they do it. You have to see this and be able to eyeball it, okay? So let's see if we can clone this channel below. Beautiful. 1, 2, 3. Remember, the line below doesn't do anything other than showing you that downwards channel, right? There's nobody that is trying to buy from these zones. It's just, you know, that on the higher time frame, some guys would sometimes buy from here and sell from here. Completely stupid, but let's not argue on this. And as you can see, this here made a new high. It's an internal structure, so I'm not going to put it in here. I'm just keeping that order flow here. The relevance of this liquidity is downwards, right? So this is where the stop losses are. Let's continue price. Vector candle. Now we have potentially equal lows or potentially breakout traders if I remove this. Okay, now you can see candle broke that structure, closed below. Already we have confirmation that we have breakout traders entering. Why is it important for that candle to close below? Because remember, if you've seen the adventure, there is some EAs that trade the breakout traders strategy. I've tested multiple ones. It's the most common one on the M1 and M5. When you have vector candles, when you have clear structure, EAs enter here, okay? So this is why it's also relevant structure. Let's continue, because it's not only retailers, we also have those cute little EAs. All right, so we have, okay. All right, so we have potentially another SMC zone in here. All right. So stop loss goes here. Now, let's continue price. So if this is potentially an internal break, not sure about that. We'll see if it goes higher. Okay, so now it would confirm that we have some SMCs here also. All right, so now we would have stop loss here. If we have also a new structural high, we have breakout traders entering here. See how I just copy the things? It's just control and copy. It saves so much time. So I would suggest you guys to use it. So there's 2 stop losses here. All right, so now let's go and see what are the liquidity that has been taken. We have these guys here. Look exactly how the vector candle liquidates perfectly all of those stop losses. Can you see it? Look, there's no doubts that this is all being taken. And remember, I'm putting this as a visual representation. So sometimes the accuracy will not be precise, but it's important to note that the structure are the ones that are being targeted, okay? Now we have, okay, perfect. So see here how this took this structure here. So let's make sure that these here that this got taken also, okay? So it's just so you guys understand. Now, what do we have? We have that breakout trader is here, entering here. Now we have that zone here that came and retested, right? So we have breakout and retest traders. Breakout and retest traders entering. So if they enter here, let's see if price pushes higher or they get stopped out immediately. God damn, what is this? Okay. God damn it. Can it go higher? Come on, baby. All right, cool. So now we have breakout retest here. We also have breakout traders here. Both stop losses would be here. Okay. Now let's see if price will liquidate all of those stop losses. So we can just stack them together here. Here we go. This one is a double. And just actually see about the accuracy, how perfectly it induces those stop losses. So now let's go look to the left and see where is the remaining liquidity. So we have this here. This one has already been taken. We have this one here, and these one here. These ones we have 1, 2, 3 strategy. So this is relevance. This one is like in the middle of the road. So potentially it will be taken. So let's continue and play price. Now we can also argue that we have, since we have breakout traders here, we can also say that this is the push that led to the new high, but I'm still marking up that liquidity, that stop loss here for the relevance of pushing higher, okay? So let's push and see. This one has been taken. All right, look. It's always a vector candle. When a vector is pushing, it's also inducing people to enter or being taken out. As you can see, there's a new structural high. I'm not going to be marking this line here for this thing to be enticing people to enter. I'm just not going to go into the over refinement, but let's see what's also happening now. Now we have potentially kind of a upwards channel, more so of a trend line, right? Let's adjust it. It's really important that this is like really clear and you have no doubts, right? You have 1, 2, 3 touches. Remember, they enter at the second touch and at the third touch, okay? So what are we having here remaining? We have this and this and all this. So basically all this is taken, all this is taken. We have these guys, these guys, these guys, and these guys, these guys, these guys. It's important to see it every single day. And a lot of the time, this will answer your question. Oh, how come are we reversing at this point and not this point? Why is price reacting to this zone and to, or not this zone? If you've done your analysis and your due diligence to understand the story behind it, you'll be able to see where price reverses based on the relevance of the liquidity. And right now, I'm not talking about people that are trailing their stop losses and also people that are moving their stop loss location to break even, because this is also variables that you guys need to put in count of the complete curriculum, because basically if we have breakout traders here entering, let's say, but potentially when price push it here, they move their position to break even, and this is why price came back here and then reverse instead of taking the liquidity, because they are smart. But remember, the big guys have access to the order book, so basically they can clearly see where the stop losses locations are. We don't. So all those trailing stop losses, all those stop losses location, and all of the break even are all based on hours and hours of my own analysis. And this is why I need you guys to do it on your side also, because you cannot just believe me because I'm showing you a chart that clearly indicates the perfect scenario. Sometimes it will not happen. And this is why it's really important for you guys to do your own research. Okay, let's continue and see what happens. Okay, we have another reaction to the trend line. And remember, this is all kind of not touching, but it's still explaining and showing the same story. They are building higher highs. They're building new structural high. They are enticing people to buy. Okay, let's go. Let's continue. Now we have kind of a zone in here potentially. Let's see what happens. A little consolidation, like they call it. Price pushes lower. So now we have breakout traders entering in here. We have stop loss in here, but we also have that little kind of a equal high zone here. So I'll put another stop loss location here, and I'll just copy this thing here. Hello? Can you guys hear me? I've cut out.
Yeah, we hear.
Audio is good. Okay. You hear perfect. Okay, perfect. Let's continue. Please put in the chat if you don't hear me. Okay, so now we have breakout traders entering here. New structural low, candle close below. What does this also entice? Right, I think you already know it. Break of structure. Okay, if this is a break of structure, they will try to short from here. Okay, so this is an SMC. Okay, if it becomes an SMT, we'll adjust it after. SMC. So what this also says? Another stop loss looking here. And remember, those stop losses here are just there to make it cute so you guys understand the relevance of the liquidity. I'm able now to just see it with my own eyes so I don't mark it anymore, but it's important to practice and practice so you can easily see it. Okay, what do we also have? Since we had a break here, we have kind of a supply zone here, or demand zone, whatever you call it. So potentially we have also break and retest traders entering here. Okay, so let's mark a break and retest also. Stop loss in here. Perfect. And why is this equal highs relevant? It's normal. It made a new low. 1, 2, 3, whatever it touches, put the new low. If it was only regular equal lows, equal highs, the relevance behind the stop losses wouldn't be that big. It would still be induced, but I mean, it wouldn't be like causing a complete trade opportunity. Sorry, I'm just taking some water. All right, let's continue and see what happens. Holding, playing around. All right, so now we have a new low for them to potentially start being excited. It should induce. All right, cool. So now we remove this stop loss, this stop loss, this stop loss. Every single time there's a vector candle, I look to the left, the damage, right? You don't take a trade from there. You see what is the damage it created. So we have here, look how perfectly it induces those stop losses. And of course, these are all stacked, but these have all been perfectly induced without any doubts, right? Now we also have break and retest traders here entering. And I know this is not my usual chart. This is pretty messed up, but it's just to help you guys out so you can understand where are their stop losses. At this point in time, and this is really where it's important to understand that when you see me catching like peak trades, when you see me catching reversal trades, it's always because there's no more liquidity to be taken in a relevance point to the left, right? At this point, there's no more liquidity. They can either continue higher or they can just reverse, okay? Let's see, what do we have left? We have these guys here, these guys here, these guys here, also here, and also here. To the left, in the intraday perspective, we have nothing, okay? Now, timing comes in place, our entry models comes in place, the medium inducement comes in place for all reversal potential opportunity, but the goal is to understand where is the relevance in this current price action. So you can understand that right now there's no more sellers in, there's only buyers. So what do we have to do now is either induce more buyers or induce sellers and then take out the liquidity at the same time. So let's see what price does, okay? Peaks, all right. Now here we go, continues. And now this is like, a lot of people are like, how come sometimes it peaks here and it peaks again? Look how it's enticing break and retest traders to enter. So now let's put that zone here, okay? They need to induce everybody again, okay? Let's see what happens now. Oftentimes they will always induce break and retest traders again, and this is usually where your boy would enter, okay? A little aggressive, but that's how I am right now. Let's see what happens. Okay, we have kind of beautiful equal highs here. Why? Because it has done kind of a new low, all right? So I'll mark it like this just so you understand. There's no structural low, the real structure is here, but into an internal structure, it has been enticing people to enter. And I go really into the over refinement precision right now, just so you understand. If there's also a breakout traders entering, what is there also? POS people are, I forgot to put SMT in here. I'm sorry. This was an SMT. Okay. So let's see. We have a POI in here that is also an SMC. Now you would tell me, okay, well, Joe, this is an SMC and this is a retail breakout structure. Should be this an SMT. I personally would never buy from there because of this. So this for me, it's automatically an SMT. If it works, it works. Whatever, it doesn't matter. It's just I'm saying how I see it, and also especially since I have this break and retest traders entering here, potentially we will have a new high. And at this point, I'm already break even from my trade. Okay. Now we have a new structural low. Oh, that's crooked. I'm really sorry. New structural here, low here. Right. So let's go and grab ourselves a little breakout traders in here. And we have here, this here. And let's see what happens. Also, this is taken so you guys understand. Now this stop loss is taken. Let's see. Reacting to these equal lows, and see, like this is an SMT, but I'm not gonna mark it, but you see how they react. If they don't do a new high, it's there's no opportunity here, right? It's just they're just reacting to the liquidity. Look, they take the stop loss, there's an impulse because those orders has been closed. It doesn't mean because it's equal lows, right? It's just they put it equal lows in the adventure to make it clear, but this it's just reacting. Nobody's trying to buy from here. It's completely irrelevant. When you want to have real equal lows, equal highs, it's really when there's multiple touches and there's a relevance behind. At this point here, it hasn't done a new high, like in here, right? 1, 2, 3, new low, relevant. One reaction, there's nothing in here. Remember, it needs to make a new high or new low, okay? So if this is also taking out liquidity, enticing people to enter, it's also enticing breakout traders also. What is this structure that made the new low? It's this one here, all right? So second stop loss. Let's continue and see what price does. Now, breakout traders are also here. And remember, this break here made a fake those equal highs and made a new high, but there's also a structural leg here. And this was my mistake. I forgot to put a stop loss here because the breakout traders that entered here are also having a stop loss location here because this is the push that led to the new high. But the structural leg here is also relevant. Okay. So let's check here also, is this also being induced? We adjust to the structure here. It's being induced, right? Look how beautiful. Still after all these years, it still surprises me. So I'm just gonna put it here so it's clear, trend line here, and also trend line here. I forgot to put it. All right, pushing. Look, reacting to the liquidity, reacting to this zone in here. Let's see if this becomes a relevant SMT or no. Remember, if I've seen people putting like, oops, SMT in here, SMT in here, SMT in here, SMT in here, like other than just putting rectangles in your chart, you're not doing nothing good, right? It's just not relevant enough. Let's see if it does new high. All right. No new high, irrelevant, right? But 1, 2, 3, new low, relevant. Breakout, right? Okay. First of all, we have breakout. So we add a 1 stop loss location here. We also have equal highs, relevant because it made a new low, right? Stop loss location added. I got it. It's becoming too small here. That's what she said. All right, let's go. Here we go like this. But also, what do we have? Structural break, retest of that zone. We have here a break and retest entering. Here we go. Break and retest also entering. So what do we also have? Another stop loss. And let's push price lower. What do we also have here? Now it's taking out all of this liquidity. Look, always vector candle when taking out liquidity. When they're putting a vector candle, they're enticing people to enter, and they're also taking out people out. So let's continue and see what happens. Okay, here we go. And look how it wicks perfectly. And boom, it goes there. And now all over again, it starts. And where the line is where I will stop. So look at this and tell me if this isn't clear enough for you to understand where is the relevance in the liquidity architected by them. All right, so it's important to practice this potentially every single day if possible. And this is where you're able to really know where is the reversal point? Where is the point of invalidation, also confirmation based on other confluences we have. But the whole strategy relies on understanding this. Every single structural point has liquidity, but why is this zone less important than this zone or this zone, right? It's always important to know that if a structure hasn't done a new high, then why would people enter? And also, let's argue, there's some stupid traders that enters even if there's no new highs or new lows. But our goal is to identify what the masses are doing. And we need to think as also that we have multiple EAs trading those strategies. I don't know if you guys already know the background behind Rame. His complete strategy was built because he was looking at the results of those EAs, because Rame is a programmer, so he was using those strategy and making them into the tester for multiple months, and he was seeing every time the retail strategy failing. So it's in a nutshell, the lit strategies is to trade against or in line with the retail strategies. So it's either the manual trading, the EAs, and all this crap. So this is why if you understand liquidity, you will know that you can potentially trade this here, right? This zone. You can maybe also trade this zone even though it's in SMC, and why you should be taking this based on this XYZ, okay? So I think this was a little bit longer than planned, so I'm not going to do another day, but I'd like to go into a more of a Q&A part. So what I'll do is I'll stop the recording. I'll restart the recording strictly for the Q&A, and you guys can just unmute yourself and ask your questions. So let me just stop the recording.